Welcome to another thinkScript tutorial. In today's video, I'll be showing you how to build your very own backtester that allows you to test pullbacks into key moving averages. The goal of this tutorial, or rather the backtester, is to help us answer three simple questions. The first question is, does buying and selling pullbacks into moving averages really work? We've heard a lot being talked about this, but I'd like to really put that to the test here. Does it work on any time frame? Is there a market that it works on better than others? Things of that sort. Question two, let's assume they do work. Well, which moving average is the most effective for whatever market you're looking at? Is it, say, the S&P 500? Well, is it X moving average, Y moving average, or Z moving average that backtests the most effectively over whatever period that you'd like, say 5 years, for example? And question three is, let's say that it does backtest well, moving average pullbacks do work. Well, then comes in the question, do we wait for a confirmation, some sort of a pattern, or do we enter blindly when we have that first pullback opportunity? These are the three questions that I'm looking for this particular tool to help us answer. Now, there's a few requirements, and a lot of this is around trying to keep it simple, but also try to keep it in a repeatable process, something you can actually follow as a training strategy. Requirement number one, we need to be able to quickly test different moving average pullbacks, and this needs to be within some sort of a structure. So something like, say, stacked moving averages, where we already know that the market is either trended upward or downward, and we're then looking at focusing in on these pullbacks. That helps us filter out a lot of the chop sort of places where the backtester may typically take a trade, but by having a stacked moving average requirement, we can filter out some of those lesser opportunities. So that's requirement number one. Requirement number two is it needs to be able to work on any market. This is stocks, ETFs, futures, Forex, any of that good stuff that's supported inside of thinkorswim. Number three and number four, it needs to be able to work on any time frame, and it needs to work for both longs and shorts. So both obvious, but it's just a key tenet of this backtester. Next up is one that I think is a little bit more interesting, which is we need to have clear entry and exit signals. That means little room for discretion, where every single time, whenever, say, we have an entry, X, Y, and Z conditions are met, and the exit takes place every time, say, A, B, and C conditions are met, whatever we define them to be. Basically, they're clear, and all of this then leads us to have a repeatable process, which in turn leads to a nice trading strategy. Now, before we dive into actually building this, let me give you a comparison in the S&P 500. So here I've compared on the S&P 500 pullbacks and the SPY ETF. I've gone back to a length of 5 years, and I'm looking at longs only just for this particular backtest. Our target is from our entry price, I'm looking for 3 times the average true range, and for our stop, I've skewed that a little bit away from that 3, looking for a 2 multiplier to the ATR. So here's the parameters for the backtest. Now let's take a look to see what actually ended up happening. If we use the 8-period exponential moving average, and we focus in on the pullbacks only, that led to a P&L of 1,732.10. Not bad, but when you compare it to some of these other numbers, not that great as well. In fact, if we compare that to waiting for a confirmation, this means a specific pattern that we'll code in this backtest, you can see we changed that P&L from 1732 up to 6,023.84. That means we've been able to convert a lot of the losers, a lot of the more aggressive trades, into some nicer, more handsome winners. So that's really part of what I'm looking to backtest here, how one simple change can really help transform the P&L expectancy of a particular strategy. Next up, if you compare, say, the 21 EMA, the pullbacks only, 4,291.46, so we're starting to see a pattern. The deeper the pullback, buying that pullback blindly is a better idea or can be justified. You compare that to waiting for a confirmation, that P&L drops to 1551. Now let's move on to the 34 EMA. There, that number continues to increase, 5934, 5934 for just buying the pullbacks. Wait for that confirmation, that number decreases to 4,556. However, even though this so far is the highest number here, you compare this to, say, a little bit more aggressive of an entry with that 8-period exponential moving average and waiting for the confirmation to help justify the additional risk that you may have to take, it tends to pan out a little bit better in comparison to just that 34 EMA blindly. And finally, the 50 SMA, 5,046, so more or less similar to the 34 EMA. You had to take drastically less trades to get to the same P&L compared to the 34 EMA, so a little bit more efficient here. Compare that to waiting for a confirmation. That drops down to 3,034.42, again as a result of most likely missing out on a few trades. So a very quick example here inside of the S&P 500, but hopefully this gives you an idea how using the same backtester that we're going to be building in today's tutorial can help you make similar comparisons to try and find the strategy that works best for you, that maximizes both the P&L along with the actual probability of winning this particular trade. All right, with that out of the way, let's dive into our charts and start writing some code. Now inside of our thinkorswim platform, click the Studies icon to get started. Make sure you navigate over to the Strategies tab. That's what allows us to create a backtester with P&L reporting. And there we can click Create. One setting rather, to make sure you have turned on, click this Global Strategy settings before you start, and make sure this is checked, the Display Floating P&L Study with Strategies. That will give us a nice sub-panel with the P&L charts, which allows you to very quickly get both the numbers in terms of the P&L, along with how that strategy has fared over time. Now with that, I'm going to come back into the Strategies tab and click Create. Now at the top here, let's start by giving this a name. I'll call this Moving Average Pullbacks. And inside of this, we can start by writing some code here. So first thing I'll do is create a few input variables that I think are just classic input variables to always have with the backtester. So one of them is long entries, and here we can select this to on, and we can also create one for short entries, and we can leave this off for the time being. Now splitting up long and short entries like this allows you to be able to control this from the studies menu, which means you can turn on, say, long entries only for the backtest or short entries only, and divide them up to keep the P&L separate and accurate. No trades overlap one another. Now after that, I think another easy win or low-hanging fruit that we might be able to knock out right off the bat is creating that structure of the stacked moving averages that also gives us some moving averages that we can start to do other things with. So let's start by defining the set that I'm going to be using. So that's EMA 8, exponential moving average, and that's using the closing price with a length of 8. Again, this is a built-in function inside of thinkorswim. I've defined stacked moving averages many times, but for those that are new, this is the variable EMA 8. This is using the exponential average function that's built inside of thinkorswim and using the closing price set to a length of 8. Now I repeat this for the 21. So close 21, and then we can repeat the same for the 34. And then for our simple moving averages, I'll say SMA 50, and there the function is simple moving average, close 50, and then we can add in one more for the 200. So that's going to be simple moving average, close 200. Now that we have our moving averages defined, we can also define the actual stacked and bearish and bullish stacked, So I'll say def bullish stacked MAs, and there we can say EMA 8 is greater than EMA 21, and EMA 21 is greater than EMA 34, and EMA 34 is greater than SMA 50, and SMA 50 is greater than SMA 200. Now I can repeat the same thing for the bearish side, and I'm just going to copy paste this and change the signs here. So I'll say this is bearish stacked moving averages, and everything here needs to be less than. So less than and one more. So at this point, what we've done so far is we've created two input variables to control if we want to test longs or shorts. We've defined the moving averages that most likely I think we'll end up settling in on. And then we've also turned them into stacked moving averages, which allows us to very quickly gain structure for that particular market. Now, one thing that I think would be nice to have is for the user to be able to change which moving average we'd like to be measuring a pullback to. That's the 8, the 21, the 34, the 50, or the 200. Now, there's a few different ways you could do this. One is we can create an integer value here, but I think it's a little bit more useful or intuitive to actually take these same moving averages and let the user select them using text. So what I mean by that is we can say something like input entry MA, so entry moving average, and here I'll use the choice panel, so I'll say default, and there we'll put in all of the moving averages we have. So EMA 8, 21, 34, and I'll do the 50. I'll leave out the SMA 200 mostly because that seems to never get triggered. Actually, let's add it in, but keep in mind that that will be triggered very few times, considering by the time you pull back to the 200, you've most likely broken outside of the stacked moving average structure, which is one of our requirements. So now that I have this, we need to define or write some code rather that actually plugs or connects this EMA 8 value to this EMA 8 value. So the way we can do that is by saying something like def entry pullback MA. This is going to be just a variable that we assign to each of these switches. And so I'll say switch entry MA, and there, open curly bracket, close curly bracket, and I'll explain what I'm doing in just a second, but follow along for the time being. And here we'll take each of the different choices we have and call them cases. So for example, case EMA 8, case EMA 21, case EMA 34, case SMA 50, and then case SMA 200. Now inside of this, we can take that entry pullback MA, which is going to be the output variable from this entire switch function, and we will set that equal to, in the case of EMA 8, to this EMA 8 value. So that's how we connect the two. So now I need to repeat the same for all of the different moving averages we have here. So I'll say entry pullback this time is equal to EMA 34, entry pullback is equal to SMA 50, and the last one, entry pullback, is equal to SMA 200. That should hopefully take out the errors. Perfect. And now I know we still have an error down here, but if I click OK, let's see if this lets us test it. Not yet. Let me add in some false AddOrder code just so I can show you what we just did. So I'll say close, 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 just for the time being. Order type by 2. You don't need to follow along with this part. I'm just trying to compile this so that you can see what we just did there. I keep making silly mistakes here. Okay, so now if I click OK, we have no errors. Now I double click this. We have the long entries, yes and no, so we can control that from the studies panel. Short entries, same thing, yes and no, set to a default of no. And the most important one, which we just did, is you can select which moving average you'd like for our entry, and that can be done directly from the studies menu, so you don't need to keep going inside of the code. So that's really the whole purpose of building this. We first define the moving averages. We then let the user select it in a nice form, something that makes a little bit more sense compared to an integer value here. And we've then connected that to the actual moving average that it tags to down here with the switch function. We've also defined our stacked moving averages, and that's what we have as of right now. So let's keep moving forward. Now, what we need to do is define what our entry signal is going to be. Now for our entry signal, if I come down here, there's a few different things we'll want. Let me write just this out in comments first. So we need to see for our entry signal, we need stacked moving averages. We need for, say, the pullback only, we need the low to be less than the particular moving average we're looking to test. And that is tied back again to the entry MA. So that's just pullbacks. For the confirmation, where we want it to pull back and then price to do something more useful, as in show us that, hey, either buyers or sellers have control, confirmation only, we can say something like we need pullback on current or prior bar. And let's just use, say, a bullish example here. For bullish example, we need the close to be greater than the previous candle's high. That means we've closed above it. We've had some sort of signal here that bulls are a little bit more in control. They've been able to break price action and close above yesterday or the previous bar's candle. And that is then that confirmation signal that we now enter looking for a move away from the moving average. So that's the overall gist here. To do this, we can use a similar switch function as we did up above. So let's say something like def bull entry signal, and then we'll also need a bull entry price, and then we'll need the same thing for the opposite side. So entry signal, and then bear entry price. Now, of course, we'll see errors here because we've never assigned any value to this. So let's go ahead and do so. Now, one thing we can have here is we'd also like to be able to change the entry type directly from that studies menu, similar to how we choose a moving average. So we can say something like pullback only or confirmation. Those are the two choices that we have here for this particular backtester, and that goes back to the questions we were looking to answer. Now here I can come in and say switch entry type, and then open curly bracket, and we can also close that out. And then in here I'll have each of our two cases defined. So we had case pullback only, and then case confirmation. I believe that's what we named it, right? Pullback only, confirmation. Perfect. Now inside of there we need to define each one of these four variables. So I'll say bull entry signal here for our pullback only is going to be equal to bullish stacked MA. So that's condition number one. We need to have stacked moving averages. And for our pullback, we just need the low to be less than or equal to our entry moving average, which we've defined right up here. So the entry pullback MA. And let's close this out. So that now is our first condition here for the pullback zone. Let's define the same thing, but now for our confirmation zone, or confirmation type, excuse me. So there, our bull entry signal would be the same stacked moving averages, except instead of having this low is less than the moving average that we're looking at, we can use either the current bar or the previous bar, since what we'll see a lot of times is that previous bar will be the low that's in play, something that's like this, and then the next candle is where we close above it. So it can be either the current bar or the previous bar. So for that, I can use something like the lowest low from the past two candles needs to be less than or equal to the entry pullback that we're looking at, the moving average for that pullback. And then for our confirmation, we can say our close needs to be greater than the previous high. So fairly straightforward here. That's what I think we would be looking for. And maybe that tab was a little unnecessary. Okay, perfect. Now we need to define the bull entry price. So let's keep coming in, bull entry price. And in the case of a pullback, that bull entry price is going to be the actual moving average itself, right? We're blindly looking to buy that moving average. So I can say that closing price here is equal to that moving average value. Now for our confirmation, that bull entry price is going to change since we're now waiting for the close to be greater than the high, which means our entry price is the close price. Now we still have, whoops, I should have named that bull entry price. Okay, now we need to define our bearish side's conditions. So here for our bear entry signal, this should not say exit. So for our bear entry signal, we are looking for the exact opposite of this. So I can copy paste this just as a guide here. And I'll change our bullish to be, we're looking for bearish stacked moving averages. And here our high needs to be greater than or equal to that same entry pullback moving average that we're looking at. Next up, we have the confirmation side. This is similar to what we had up here. So I'll say bear entry signal is equal to, and repeat the same process we just did, copy paste that, and change the bullish here to be bearish stacked moving averages. This time it's going to be the highest high of the previous two candles, and that needs to be, again, greater than or equal to our moving average pullback, and our close in this case needs to be less than the previous candle's low. That's how we know we're now making a move back to the downside. And then similarly, we need to define that last entry price, which this should be a little bit more obvious, and that is going to be for our top condition, that's going to be our entry pullback MA. And then for our confirmation choice here, bear entry price, that is going to be, again, our close. Now we did a lot there, so let me just take a quick pause here and go over what we just wrote out here in terms of code. We wanted to define both bullish and bearish entry signals along with an entry price. The entry signal will come into play in the AddOrder function when we write that, is our Boolean value where we know that, hey, a trade is triggered, take that particular entry. The entry price gives us the exact value that we're going to be using in the backtester as the first candle, or the first price rather, to be measuring from, which helps us define the P&L. Our bear side is the exact opposite. Now, using that, we have two different choices based off of the backtester we're looking to build. You can either use a pullback to the moving average, and this is sort of blindly, you're not waiting for any confirmations. If you do that, then the moving average itself is the price that you would be entering in at, and we have some simple conditions where it's either a stacked moving average and the low price is less than the moving average we're looking to pull back to, and then on the bearish side, it's the exact opposite. Conversely, we can wait for a confirmation signal where we're waiting for price to prove to us that, hey, we're now making a move away from said moving average, and there we added in a few extra conditions. We said we need stacked moving averages in the case of a bullish side. We're looking at both the current and the previous candle to see if either one of those two has pulled back to our moving average, and assuming one of those has, we're then looking for the close price of the current candle to be greater than the high price of the previous candle, or conversely on the bear side, the low price. So that's the overall gist of what we have written out so far. Now, just a quick recap one more time for before this as well. We define the moving averages. We let the user select what moving average they'd like to choose from directly the studies menu, and we've connected all of that to essentially seamlessly work together. Now, the next thing we need to do is define what that ATR value is going to be. And there's a few different ways you can do this. One is you can just use the built-in ATR function here, and that's what we're going to be using. However, if you plug that into the AddOrder function here, what that's going to lead you to have essentially is an ATR value that keeps changing with every single candle. That's not what we want. We want the ATR value to be the ATR value that was the defined value when our actual entry condition was true. This allows us to essentially save that ATR value and have somewhat of a constant, something predictable, where on the day that the trade actually triggers, you have the ATR, you know the multipliers that you're backtesting, and you can very easily define both the entry and exit prices. So there's little room for discretion there, which is what we're trying to go for here. So to do that, we need to be able to store that ATR value and reference it whenever possible from the actual entry candle. So for that, I'll say def ATR value, and here I can say something like if we had, say, a bull entry signal and we did not have that same bull entry signal on the previous bar, or, and now we can define the bear side, bear entry signal, and we did not have a bear entry on the previous bar, then we're going to save the ATR value, and I'm going to use a length of 14, just a default value. And if this is not true, then carry forward the value that was already stored. So by doing this, we essentially track the ATR value on the actual bar that the trade triggers, and if we're on any other bar outside of the entry bar, then it's going to use the value that we've already saved. So this allows us to essentially have a static ATR value that we can then use for our comparisons for our entries and exits. So we've defined, I think, our entry conditions here pretty thoroughly. The last thing that I think we have left to define is our exit conditions. And for our exit conditions, I think we can actually define that inside of the AddOrder function. So let's start by defining first this buy to open. I'll delete this so we can write this out from scratch. So I'll say AddOrder here. And there's a few different parameters this AddOrder function takes. The first one is defining what is your order type. So there, if I type in order type, you'll see the different choices we have here. You have buy auto, buy to close, buy to open, sell auto, sell to close, or sell to open. These are very intuitive. They're exactly what you'd believe. So for example, for a long side opening order, we're looking for a buy to open. So there I can say order type dot buy to open. Now the second parameter inside of this is going to be the Boolean condition. This is something that needs to be true for us to actually purchase, in this case, the said equity, futures market, whatever it is. This is the condition that needs to be true for this entire function to trigger. So there, I can add in our bull entry signal. That's going to be the value we use. The third parameter here is the price that it uses to actually purchase, or in this case, buy to open. What is the entry price? So there, you guessed it, we're going to be using that bull entry price. And then the last parameter is the quantity, which we can actually define one more input variable up here for quantity. And I'll set this equal to a default of 100 and come down here and write quantity. This way you can change that from the studies menu as well. And just like that, we have our first buy to open. So let's actually test this out here first. If I click apply, I click OK, I click apply, what we should see is only the very first order that triggered since we haven't defined our close. And this is essentially when, let's load in our stacked moving averages here. We have this set to an 8 and we're looking at a pullback only. So what's happened here is we have overall stacked moving averages and we're getting that first pullback to the 8 period exponential moving average, and we're using that 8 EMA value as our entry. And conversely, if I change this now to be, instead of pullback only, confirmation, we click apply, we can see that that has now changed where we're looking for that first move going away from the moving average with this particular candle. One little caveat or note to have, which I think trips up a lot of people, this pink entry will always come on the candle after the actual entry is triggered. It's just the thing that thinkorswim does. It uses the next candle. However, if we use, say, this closing price 240.30, we come into the show report, you'll see that's the exact price that's used inside of the actual report. So it uses the correct price, it has the correct signal, it just plots starting the next bar. So that's one little thing to keep in mind. So far we know our entry order is working the way we would expect. Let's now define our closing order here. And we have two different kinds of closing orders that we would have. So I'll say this time sell to close. And here for our exit condition, we have one of two things that can happen. For example, we can have for our signal, we can have our high price of whatever candle is greater than or equal to from our entry price plus some multiplier times the ATR. So I'll say target multiplier for our target side times the ATR value that we have just stored. And if that condition is true, then the actual exit price is going to be that same exact price in itself, selling out of the full quantity here. Now we'll get an error that we don't have a variable called target multiplier, so I can come back here and define that. So I'll say input target multiplier, and let's set this to a default of, let's just say 2. And then similarly, I'll create a stop multiplier as well, which let's set that equal to a default of 1. So what we've done here is we've said, hey, is the high price of any candle after our entry candle greater than or equal to our actual entry price, which is this bull entry price, plus that target multiplier, so 2 times in this case, the ATR value. If that's true, then we know we've hit our target, and if that is the case, then get out at the exact target price. So that's condition 1, and this is if we hit our target side. Conversely, we could get stopped out here, so we can say add order. Again, this is going to be sell to close, but this time is our low price less than or equal to our entry price minus our stop multiplier here times that same ATR value. If that is true, then we're going to be using that same price for our exit condition. So let me copy paste that in. Alright, and then there's one more thing that we forgot to add up here, which is our long entries variable, which we defined at the very top, which essentially lets us shut bulls on and off, and then have the same thing for the short side as well. Lets you control which of the two sides you're really looking to test. So now if I click apply, let's test this bullish side here first. We're seeing that this is working the way we expect. Overall here, the strategy using that 8 EMA started off a little bit negative if you use that pullback only, and using that multiplier of a 2 and a 1, we have a lot of trades. Let's try and change this just a bit to make sure this is working. So let's say go for a target of 5 ATR, and then let's increase the stop to be something like 3 times the ATR value. Let's see how this P&L changes. It's currently 3646. If I click apply, again still using that 8 period exponential moving average, that number jumped up quite a bit, 6579. We can also see much less red up here at the beginning, suggesting that a wider stop essentially helped you stay in this trade longer. Now let's see what happens if we change this from an 8 period exponential to maybe something like a 34 period exponential. Click apply, our current number is 6579. Apply, that number dropped down just a tad, 6104. So this is the entire testing that I'm hoping you get the value out of this backtester. It's to do things like this. But we're still not done with our code. we need to write in the bearish side as well, and then maybe we can have some fun with some final few examples on a market outside of the SPY as well. And hopefully that gives you an idea of how to use the tool in addition to building it. So to create our bearish side, I'm going to copy all of our AddOrder functions and paste them right down here, and I'll even add in a comment separator that says long side trades, and then this will be short side trades. Now here, we need to reverse all of these buy to opens and sell to closes. Instead of buy to open, this is going to be a sell to close, and instead of a sell to close, it's going to be a buy to close since this is a short side trade. Conversely, we also need to change all of the different variables here, but that's why we name them somewhat intelligently, so it's easy to do this when the time comes. So we change our long entries to short entries, our bull entry signal to bear entry signal, our bull entry price to bear entry price, and we leave the quantity as is. Now for a short side, our target is going to be when that low is less than or equal to our entry price minus that target multiplier times the ATR value, and I can change this sign to a minus, which allows us to take the actual price that we would want as well. Down here, we need to repeat something similar, except for our stop, we're going to say our high is greater than or equal to our entry price plus our stop multiplier times the ATR value. Then I need to change this sign as well. So I think this should do it in terms of what we're looking to build. I'll click apply here, click OK. Now let's try testing our short entries only. So I've turned off the longs, turned on the shorts using that 34 EMA and the same multipliers that we have. We click apply and we see we don't really have any trades that set up that met all of our criteria for a confirmation. So let's look at now pullback only. And with the pullback only, we do have trades, and we can see overall here, not such a bright strategy to short the SPY. Let's try a completely different symbol here, maybe something like, say, I don't know, Verizon, just as an example. I'll come back in. I prefer using this on the longs only. I find that we just get better data, and typically most folks are long focused traders for the most part. Let's change this EMA 34 back to an EMA 8. Reduce the multipliers here to say something like a target multiplier of 3, a stop multiplier of 2, and let's first compare that pullback only inside of Verizon. Not such a good strategy inside of Verizon. If we change that pullback only to a confirmation, click apply, got worse, so still not a good strategy. So we knew on the SPY, for example, this was a good strategy, but in Verizon, not so much. Pullbacks to the moving average don't necessarily work the way that I think one would expect. What happens if you shrink the target multiplier here? So we go 2 and maybe 1. Does that help? Nope, that just made it a little bit worse. 2 and 2 perhaps? No, so for the most part, we have not really been able to quickly craft a nice trade idea inside of Verizon. What happens if we switch this to, let's just say something like Home Depot? Come back in, Home Depot 2 and 2, 919 is the number, so still positive, so that's somewhat of a good sign here. That's waiting for a confirmation. Let's first compare that to a baseline of pullbacks only. See how drastically that number jumps up, 5,214. I think that's the kind of information that, again, we would be looking for. What happens if you change this EMA 8 to, let's say, waiting for the 21? Does that help? That brought that number way down here. Does that mean we should be, say, increasing our targets and maybe our stop as well? Maybe, but so far we're finding that that EMA 8 value, using that 3 and 2, I believe it was a nice, I think, easier way to try and manage this trade where we had the right answers ready to go. So hopefully through this tutorial, what you've learned is not only how it was fairly simple, I think, to build this backtester that helps us very quickly gauge information going back 5 years. You can even expand this to something like 10 years if you'd like. You can even come into something like, say, a 5-minute chart and still have that same level of information and data that you would be looking for. You can, if we bring this back into SPY, we can see a little bit more data. So it works on any time frame. It works for longs and shorts. It allows you to test the different questions that we were looking to answer, which I think are fairly common questions. Is moving average pullback a good strategy in the first place? Is it better to wait for a pullback or wait for a confirmation? What are the target multipliers and the stop multipliers? How much room should you give this trade? Is it better to let this trade run, or is it better to cut your profits a little bit quicker? all of those questions you can answer with this backtester, and you can of course continue flushing this out, add in your own custom moving averages, maybe some labels if that's something that you're looking for. You can even plot out the ATR value, so let's just say this trade does set itself up. You know the exact entry and exit prices to essentially put the trade in, put your stops and targets in, and let the trade self-manage itself. There's a lot of different things you can do just by using something very simple like this and backtesting your strategy before actually executing and implementing any capital, which lets you have, I think, a little bit more confidence and much more conviction as a result of that in the actual position. You can download the code for this on our website, of course, as usual. It's completely free to download, and you can find all of our other tutorials there as well in case you're looking to try and improve your thinkScript skills and learn how to build your own tools. Hope this tutorial was helpful. Take care, everyone. Good luck trading, and I'll see you in the next update.